Hello, good evening. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. This is Business Plus. We'll begin with markets. To my left is my colleague Suyash Maheshwari. Suyash, sixth straight session for the D Street Bulls party continues.
Yes, Shweta, in the last few sessions, Nifty and Sensex have rallied, and actually they are playing some sort of a catch-up rally where we have seen a divergent performance between mid-cap, small-cap stocks and Nifty and Sensex. Now, the good thing is both mid-cap space, the broader markets, as well as Nifty are participating in the rally. Now, in today's session, as we saw, it was a sixth consecutive session of gains, and after a flattish opening, Indian markets continue to rise higher, and Nifty, as a matter of fact,
getting there at 20,000, just about getting there.
19,800 has been achieved, and Sensex also has climbed almost 66,600 levels. And Shweta, if we see the trend in the past 3 days, market open on a flattish note, then we saw a decline, but in the second half of the session we see a good pickup in the buying activity, and as a result most stocks are ending with moderate gains. Now, even if you see today, Nifty was up about 0.5%, closed above the 19,800 mark, on its way to close the 19,991 peak, which it achieved in August. Sensex was up 0.5% above the 65,600 mark. Mid-cap space was the Nifty Mid-cap 100 index was up almost 1%, whereas a small-cap index added about 0.6%.
You know, I remember we discussed, in fact, extensively when the Mid-cap 100 touched 40,000. It's just about to touch 41,000. So the rally, in fact, has continued. Let's quickly get our guest, Dipan Mehta, who's the Managing Director and CEO of Elixir Securities, joining us on the show. Dipan, thanks very much for taking time out. Good to have you back. Let's quickly begin with what's happening in the Dalal Street, on the markets. It appears that the Bulls party, the Bulls rally continues.
Yeah, absolutely. I think we are in a very, very sweet spot. And what I can say is that happy days are here again, so might as well enjoy them. I think it's a great time for long-term investors. Their conviction in equities has been very well rewarded, and whatever doubts which were there in terms of what equities can generate in terms of returns and wealth creation, I think all those answers we have got in the last few months or so. And still, I think the markets, the way the liquidity is, the way I look at the counters, there's still a lot of interest coming through. And mind you, all of this rally which is happening in mid-cap stocks and to an extent Sensex and Nifty stocks is still largely driven by domestic flows. And FI flows continue to be negative. I can't imagine what will happen if the FIs also start to buy. Then certainly I think we may have even more push on the upward side.
Hi sir, Suyash here. So we had Mr. Sanjeev Bhasin yesterday, and he was of the opinion that Nifty, could cross that elusive 20,000 mark in the next couple of weeks or so. So what are your expectations? When are we touching that Mount 20K?
That Mount 20K, we already sniffed at it and came back a few weeks ago. So that's not the thing. I think more importantly is, where does it go beyond 20,000? But honestly, I think if you look at the mid-cap stocks and the small-cap stocks, a lot of them in the frenzy, they have moved up a lot. And while we are extremely positive, sentiment also is fantastic. I do need to, air a word of caution here that maybe putting money at these levels may not be the best idea. And investors who are waiting on the sidelines, please continue to wait on the sidelines. Don't jump in at this point of time. The markets may go up, it may get into a parabolic zone as well. But most of the stocks which you are thinking of buying just now, there is very little margin of safety. And also we will have one more earnings season starting from October onwards. So I'd like to just wait and watch and see how the October earnings season plays out. There's a lot of intraday volatility around that time, and that could be good opportunities to buy stocks. But for the time being, I'm in a kind of a wait and watch zone. And at best would like to trim a little bit of our portfolio, or if you have leverage positions, then reduce those leverage positions.
Okay. You talked about how we sniffed the 20,000 mark just about a couple of weeks ago and then came back from it, snapped those gains. Do you think that is likely to repeat maybe start of next week? We're already in September. A lot of fears and worries about what's going to happen as far as domestic conditions, macro conditions is concerned, especially inflation figures, demand on the back of inflation. What are the big domestic cues that we'll be tracking, and what is your hope as far as consolidation is concerned? Will that kick in next week, or is rally expected to continue?
See, it's difficult to forecast short-term movements, and look, the Nifty is less than 200 points away. It's maybe a couple of hours job for it to touch 20,000, but that's not the important thing. I think it's more important to see whether at these levels the mid-cap index starts to kind of flatten out, or there's a correction over there. Because I think last 4 or 5 months have been exceptionally good for the small mid-cap indices, and a lot of investor money has gone into those stocks. So from our perspective, we are watching that index more than the Nifty and the Sensex as well at this point of time, and 20,000 may come and go. But I think what is happening in the rest of the market, the broader sectors, that I think is more important from our perspective.
Okay.
So Demat account openings in August were at a 19-month high. Now we are seeing a resurgence in the primary markets as well. So I mean, these factors typically indicate that a structural bull run is in the offing. What would you say about that?
Well, we are in a structural bull run, and it started from the March 2020 lows, and since then it's been almost one way up. There have been a few corrections along the way. There'll be a few more corrections on the way as well. But I don't see any major speed breaks or any major resistance, at least until May 2024, where the big event is there, the elections, the Lok Sabha. And I think until then, I think markets are in a very positive zone. What happens in May 2024, let's see, then we cannot judge at this point of time. But right now we are in a multi-year bull market, and there seem to be very few threats. Not that there aren't, and we'll come to know only afterwards. But for the time being, I think all the fundamentals, corporate earnings, liquidity conditions, government policies, flow of news flow, all of them are pretty well aligned for the markets to scale higher and higher. But as I said, I think we should be prepared for a minor correction. Any point of time, any point of time it can happen.
Okay, and I also want to quickly touch upon mid caps, because you've shown some confidence in mid caps, and you said that is where the confidence and perhaps the future lies. It crossed 40,000 just about a couple of days ago. We were here, we discussed how that in fact is brilliant for Indian markets, brilliant for mid cap companies. It's about to touch 41,000. What is driving the rally in mid caps?
And also, if I can jump in, the divergence in the performance of large caps and mid caps, do you expect this to close anytime soon?
See, in the bull market, you will have this rotation of sectors. So mid caps are doing well, but at some point of time, they will have a valuation resistance. See, mid caps, and they derive their valuation from large caps, and there is only so much a percentage of premium that they can trade at the large caps. So at some point of time, we will see the money going out from the mid caps into the large caps. My sense is that will happen when we see solid FI inflows, because that money will go into the index stocks in the large cap companies. And when that happens, I think a lot of retail investors also will join the bandwagon over there, maybe even through F&O. So this rolling from large to mid to small, that will keep on going on. Coming to the first question of yours as to why is this rally there in mid cap stocks? First of all, I think they are playing catch up. Secondly, I think if you see across the board, with the exception of a few pockets like maybe software or to an extent, all the industries are doing very well. I mean, look at it. I haven't seen this happen in many, many years. You study any industry and you feel the fundamental of the industry has significantly improved in the last 1 or 2 years or so, whether it's real estate, whether it is automobiles, that means auto ancillary tires come into play. Then banks have had the best ever time. I think it's blue sky scenario for the banks. We have a fantastic capex cycle which is playing out from the private sector as well as public sector. And the elections down the corner, there'll be more government expenditure. So I have an entire capex cycle doing well. When you look at electricity generation, that's also moving up. Benign oil prices means that oil refining sectors and oil companies are also doing pretty well, although that may change because oil has touched $90. So like that, when you go sector by sector, sector by sector, with the exception of cement, where there's perhaps intense competition, maybe in odd sector like sugar, software, some select exporters. Beyond that, I think across the board, we are seeing fabulous fundamentals play out. And this entire shift, towards the organized players is certainly benefiting the stock market in terms of higher returns.
All right, and since we're talking about sectors, let's also quickly understand from my colleague Suyash how sectors performed today.
Certainly, Shweta. So, some of the outperforming sectors in today's session was the banking stocks. Now, Nifty Bank, Shweta, has joined the bull party. It was not participating in the 6-day run, but since yesterday, we have seen the Nifty Bank space has rallied about 1.5% and also scaled the 45,100 mark. So we are seeing some buying interest in financial stocks. As a result, Nifty Bank was up more than 0.5%, whereas as you can see, even individual stocks in the Nifty banking space, IDFC saw some correction in today's session. Axis Bank, PNB, Kotak Mahindra, they performed fairly well. If we can come back to the sectors, we saw some profit booking in the pharma names, Shweta, today. They were one of the few sectors which did not participate in today's run up. It was down about 0.4%. Media stocks, which gained more than 3% in yesterday's session, also saw some correction today. They were down about 1%. IT stocks, which have been under pressure, but they have kind of rallied in the last couple of weeks, saw some profit booking also at higher levels, and they were down marginally at about 0.1%.
All right, so Nifty FMCG, Pharma, Nifty Media, Nifty Metal continue to be underperformer today in today's trading session. But I think surprisingly, Pharma had done well in the past couple of sessions. It's down by almost 0.36% today. Nifty Bank outperforms today and
so, Shweta,
reversing the trend perhaps.
Definitely, Nifty Bank is reversing a trend, and it did not participate in the bull run that was going on in the past couple of weeks. But since yesterday, we are seeing buying interest in the banking names, and even today there was a report which suggested that RBI has decided to withdraw the incremental cash reserve ratio which it had implemented on August 10, and RBI will do this in a phased manner beginning September 9. Now, from what I am reading, the expectation is that RBI said that 25% of the amount of ICRR will be rolled back on Saturday. Another 25% will be rolled back on September 23rd, and the rest will be rolled back on October 8th. So
what is going to be the impact of this announcement by RBI? Dipan, I want to quickly get you in. Is that the reason perhaps why Nifty Bank is up 0.62% today? The incremental cash reserve ratio would basically, the big announcement that has come in from RBI, would that have an impact on bank? Likely to have an impact. There'll be more liquidity going forward. Is that the reason why the stocks were up today?
That could be one of the reasons, I think, but most importantly, I think we have a superb, I would say, economic activity picking up in the country. Industrial activity is looking up. As I said, capex cycle is looking up, and large sectors like housing and auto also are doing well. So demand for credit is very strong, and NPA cycle has still not turned bad. A lot of banks, NBFCs are focusing on lending to retail, which is on the safer side. And I think Street is recognizing that, so which is why we are seeing that banks have been leaders in the past, although they've been laggards last few weeks or months maybe, but that can easily turn around. You see, this sector rotation, why it happens, I don't understand, because fresh money, when it wants to invest, it looks for the laggards, it looks for where the value is, where the P multiples are low, where there is some comfort, some margin of safety. And right now, I think banks provide that kind of a oasis where valuations are still reasonable, there is secular growth, and they have underperformed. So, which is why I think, who knows, the next few weeks could belong to the banks.
Okay.
So also I just want to understand what will be the impact on rupee, because rupee had hit a record low yesterday and it has been under pressure. Now this excess liquidity,
actually all-time low.
All-time low.
Come to think of it, down by and has gone below 83 levels. What's going to be the impact? I think to continue my colleague's question here.
There will be excess liquidity now, right?
Yeah, I think that's quite disturbing that the rupee has hit a new all-time low. Even I saw that news, and And that I was pretty disappointed with that despite having such humongous forex reserves, we feel the rupee at these levels. All I can say is that the positive streak on this is that it will benefit the exporters, especially software companies, which are facing challenges because of global macro trends. But on the whole, rupee depreciation is not good for the country. Certainly reduces dollar returns and makes our markets less attractive to foreigners. But I think it's a matter of time before this starts to reverse. This is not India specific. That's the most positive thing. Maybe you may see a further weakening of the rupee because the oil prices have been moving up, so that may put some pressure over there. But no market is perfect, no economy is perfect, and we have to deal with a few problem areas. Like for us, it's rupee at present, and maybe even the monsoon also. Although I think it's raining pretty well in Mumbai today, so I hope rest of the country also is receiving rains and you are catching up on the deficit over there.
All right, and since you continue talking about domestic cues and perhaps the macros and the rain and the inflation, what are your hopes for the month of September while we await the results in the month of October, starting October 1st? What are your big expectations as far as this month is concerned? It's 8th today, so literally first half of the month we're through with the first 10 days of the month. What are your expectations like?
See, we discussed this thing, shifting of money from mid cap to large cap. I think that may play out in the next few weeks before the earning season starts in full earnest. And that I think is around about 20th October onwards is when we see results coming in thick and fast. So I think that we will see this churn happening in the next 3 or 4 weeks or so. I'm pretty certain that the Nifty and Sensex may continue to rally beyond 20,000, but you may see some correction, 10, 15, 20% in mid cap, in individual mid cap stocks, and maybe the mid cap and small cap index also may try to start going down. So that divergence, reverse divergence may start. That is one thing. And secondly, I think this earnings season could be quite interesting from many perspectives because large sectors, there have been some developments, like for example, banks. We need to see whether there's a pressure on net interest margin because cost of deposits has been moving up. When it comes to software, we need to see whether the order wins are actually getting into kind of execution mode, and how are those how the billing is happening over there. Automobiles, we need to see whether the sustenance of incremental increases in realization, how that is playing out. Of course, we have the volume numbers with us. So like that, so on and so forth. I think every economy, every sector, there are certain nuances which we need to track, and that will certainly have an impact in terms of ideation of new stocks and which way the market goes on from October onwards also.
So another sector that we have been tracking is Nifty Pharma. Now the pharma space has been one of the best performing sectors. Nifty Pharma has rallied about 30% year to date, but in the last 1 month or so, we are seeing some selling pressure where the index has declined by about 2%. Now, what's your outlook about this space? Is it overheated, or is it time to initiate fresh positions?
Also, just the news triggers on that. We know that Cipla is out for takers, and we don't know who is going to firmly buy Cipla at this point in time. Bids have been made by Dr. Reddy's. Bids have been made by Torrent. We don't know who's actually winning in the race. But what impact has that news had? Because we saw Cipla was up, we saw Dr. Reddy's was up in the past week. Is that an impact of that news trigger on the pharma stocks?
See, first of all, we were pleasantly surprised by the pharma numbers which came through. And one reason for that is better pricing trends in the US generics market. And also, I think operating profits and margins have moved up because raw material costs have kind of stabilized. And clearly that had a very positive effect on entire pharma industry per se, right from Sun Pharma, Dr. Reddy's, Lupin. Aurobindo has been a big outperformer because of this particular trend. Now, typically pharma exports, whether it is to Europe or whether it's to US generic market, is becoming more and more commoditized. So one of the aspects of commoditization is that you may have upswing in prices, but you may also have a correction in product prices as well. So right now, I think it seems that the pricing is stable over there. It can turn at any point of time. But right now, I think pricing is decent for pharma exports. They have the benefit of base effect as well. So I would think that maybe pharma can do well for one more quarter at least. It's just that I'm not prepared to pay a higher valuation multiple for pharma stocks because I'm expecting more volatility in earnings over the years. It's no longer a secular growth sector as it was maybe a few years ago or so. And from that point of view, I want to be a bit selective. But I think companies focused on domestic pharma, they have a great future. Company like Mankind, JB Chemicals, Eris Life Sciences, Disclosure we and our clients are invested, but those are all trading at expensive valuations. So we're looking for good entry points in these companies which have got domestic focus. Maybe when there is some comfort as far as valuations are concerned, that may be a good entry point.
All right, and while we're at it, and I know we have to let you go, Dipan, I just want to quickly run our viewers also through top gainers and losers today.
Certainly, Shweta. So among the top gainers in the blue chip space was NTPC. The stock rallied over 2.5%. Coal India is another stock. In the last 4 out of 5 sessions, it has been among the top gainers in the blue chip space. In fact, in the last 5 sessions, the stock is up almost 18%, Shweta. BPCL, Tata Motors and L&T. L&T, I also want to touch upon it. L&T today crossed a market cap of over 4 lakh crore, and it is now among the select few companies that boast a market capitalization of over 4 lakh crore. The stock has been on a rise since news came out that about its involvement in the Chandrayaan mission and how it helped ISRO in achieving that mission, and the stock has gained significantly. It's in fact, if you look at the year-to-date returns, the stock has rallied more than 30%. Okay. Not talking about losers in today's session, UPL was a top loser among blue chips. The stock was down about 1.03%. Apollo Hospitals was down about 1%. The stock was up about 3% after recently. So we are seeing some profit booking over there. Now the stock has been in the news because Apollo Hospital recently said that they'll be expanding their capacity. Now they'll be adding 3,000 more beds to their monitoring program. Currently, the monitoring program only has 1,000 beds. Okay. So a big boost in capacity over there. That's why the stock has been in focus. Other stocks that were in the news were Ultratech Cement. It was down about 0.77%, and SBI Life, which declined about 0.75%.
All right. So if you look at top gainers today, energy stocks were shining in today's session. Coal India up by 2.65%. Coal India, in fact, has done exceptionally well. Dipan, rising coal demand, not enough coal supply, or enough coal supply, but rising demand, therefore playing up on Coal India stock, or is there more to it?
I think people are looking for low price to earnings multiple stocks, and I can see your screen NTPC, Coal India, BPCL, Tata Motors are in terms of valuation pretty attractive levels, especially NTPC, Coal and BPCL. L&T, of course, is up because of the news you said just now. So I think part of the reason is low valuations. And of course, I think you can see that power demand is at an all-time high in the country, which is what may be driving NTPC and Coal India. NTPC, I think, is interesting because they're getting more and more into renewable energy, and that I think is showing in a better P multiple.
All right, Dipan, thank you very much for taking time out. Really appreciate you joining us with your inputs. We, of course, hope that you come back to us very, very soon. But we'll move on now, and I'll thank my colleague Suyash also for bringing us all the stock markets update every afternoon.